So today we're going to look at May June 2022, Unit 1, Paper 2, Accounts. And we're going to be doing question 1. So it says, number 1, list 3 advantages of IFRS for SMEs. So when they ask you questions like this, they're really just asking what are some purposes, some positive purposes that IFRS has for SMEs. And I chose to give you these 3. So we have comparability, understandability of reports, and verifiability. So we can compare the reports amongst the different small businesses, and it also brings understandability for those persons who may not know a lot about accounting, and verifiability. So now the next part says the consultant developing the procedures manual for the Blue Star Charitable Trust has recommended the following internal control procedures for the proper handling of cash. Outline the internal control principle that is applicable for each of the procedures labeled below. The trust's checks should be pre-numbered, and that deals with sequencing. So it says sequencing of documents. That is the answer for that part. So we must sequence our documents to ensure that if anything happens and somebody writes a receipt and tears out the page and takes that money, we notice it. Number 2, the check signatories for the trust are the chief accountant and the trust operations manager. So that deals with authorization of transactions as well as segregation of duties. So whichever one you choose, you should be able to get a mark for that. And then we move on to the next one, which is all bank checks are stored in a fireproof safe in the chief accountant's office. And that deals with safeguarding of information, accounting information. And then we have the next one, which is the assistant accountant is designated as a person who is authorized to record cash transactions in the computerized accounting system. So again, this deals with segregation of duties. C says states the 2 primary users of general purpose financial reporting according to the IASB framework. Alright, so the 2 main users or the 2 primary users is the investors and the shareholders. And then finally, the last transaction says the assistant accountant is designated as a person distinguish between the comparability and understandability of useful financial information. So when we talk about comparability, we're referring to the pattern. So it ensures that the same pattern is used amongst financial statements across entities, while understandability ensures that regular persons who may not have any accounting knowledge or anything like that can comprehend the information presented in financial statements. So we move now to number 1D. It says the following list of balances relates to Angola Coffee Corporation as at the 1st of July 2019. They listed the items, and it says no preference or ordinary dividends were paid during the financial year ended the 30th of June 2019. During the year ended the 30th of June 2020, the company performed well financially and engaged in the following transactions. So we should prepare the journal entries for the transactions noted above. So we're going to start with the 30th of January. Purchased 600 shares of Charlie's Pancake Company at $175 per share plus paid a brokerage commission of 1.5% of the transaction. So the first thing that we're going to do is that we're going to head up our general journal. and we have a day, details, debit, and credit. So if we are purchasing 600 shares in Charlie's Pancake Company, that is an investment for our company because we're Angola Coffee Corporation. So we're purchasing shares into another company. So that's an investment. And it's 175 per share, and we're purchasing 600. So what we're going to do is to multiply the 600 by the 175. So 600 multiplied by 175 gives us $105,000. So we are going to record that as investments. And we know that when we are investing into something, it's a debit because this is an asset to the business. So we debit investments. Then we look again. Notice that this transaction had two different parts. We also paid a brokerage commission of 1.5% of the transaction. All right. So when we pay brokerage fee of 1.5% of the commission, we're going to find 1.5% of 105,000 that you just got when you multiplied 600 by 175. So multiplied by 1.5%, which gives you $1,575, and we record that as a debit as well because it's an expense and expenses are debited. And then we credit the bank to show that we're making a payment. And whenever we're making a payment, it goes on the credit side. You will also need your details. So in your details here, I have to record the purchase of shares in Charlie's Pancake Company. All right, so for the 4th of April, issued bonus of one for every five common shares. So we're going to divide the total ordinary share by 5 to find out how much bonus we issued. And so 3.2 million divided by 5 will give us 640,000, which we're going to debit to retained earnings and credit to ordinary share capital. So it's to record bonus issue of one of every five ordinary shares. So whenever there's a bonus issue, we normally debit retained earning and credit the share capital that we're issuing the stock in. All right. And we say to record bonus issue of one of every five ordinary share. Then we move on to the next one. The 13th of May, we purchased 5,000 shares of Sharp Telecommunications for a total consideration of 176,750, inclusive of a brokerage commission of 1% of the transaction. All right, so this one they worked it out for you. It's $176,750. And since we're purchasing the share, this is also another investment. So we have the investment debited. However, they said that the brokerage fee is inclusive. So we have to find 1% of 176,750. So you can pause the video and type that into your calculator. So 1% of 176,750 is 1,767.5. So we record that as brokerage fee that is also debited, and the rest of it, so minus that from the figure. So 176,750 minus 1,767.5 will give you 174,792.5, which is now equal to 176,750, which is on the credit side for the bank. And we say it's a record investment in Sharp Telecommunications. Then we have the 30th of June. We paid debenture interest and redeemed the debenture at par. So What is the debenture interest? The debenture interest was 8% for the year. All right, so we're going to find 8% of the debenture. So 8% of $900,000 is 72,000. So that's what we're going to pay as debenture interest. So debenture interest, we debit it because it's an expense of the business, and we credit cash to show that the payment is being done. And we say to record interest on debenture. Please also note that any item that you're going to credit, you need to indent it so that it shows that that is credited. Then we move on to the next one, the 30th of June again. We paid total preference dividends, and we declared and paid interim and common share dividends at $10 per share. Alright, so let's first do paid total preference dividends. Alright, so preference dividends should be 5%. Alright, so it's 5% of the $115,000, which will give you the dividends that we paid for preference. Alright, so I broke my transaction into two parts. So here I have the 5,750 that you get when you multiply 115,000 by 5%. Where did I get the 115,000? I got it from here. I will multiply it by the 5%, which will give us 5,750. I debit my 5,750 for my retained earnings because I'm paying from retained earnings, and I credit dividends payable preference shares. And then I did for my ordinary shares, which they told us that we declared and paid interim common share dividends at $10 per share. So remember that we also issued more shares. So we have in total have issued seven 640,000 worth of shares. Alright, so we issued 640,000 worth of shares, and we also had 3,200,000 worth of shares, right? But we need to find out how much shares that is equivalent to. Alright, so if you add 3,200,000 plus 640,000, you get 3,840,000. Now we need to find out how much shares that is equivalent to. So we divide the par. We divide the par value, which is $200. So when you divide 3,840,000 by $200, you get 19,200. And now you multiply that 19,200 by the $10 per share that we need to give each stockholder. So we get 192,000, which we take from retained earnings and credit dividends payable ordinary shares. And then you need a detail. So for mine, I have to record dividends paid out for ordinary and preference shares. And that would be the answer for question 1. So if you have any questions, please comment below.